Hey everybody, welcome to another episode of The Executive. Really excited to be joined by Isaac Freckleton of eFinancial. eFinancial is a fintech company based out of Salt Lake City in Utah. Eve is doing point-of-sale financing for the service industry and is doing really interesting, disruptive work in that field. So great to have you.
Thank you. Glad to be here.
Well, tell us about Eve. I know you've been in stealth mode for a while now, and
Yeah.
it just came out about what you guys are working on. I'd love to hear the story and what you guys are building.
Yeah, thanks. We brought a really incredible team together. Chief credit officer from a huge publicly traded fintech mortgage lending company. I work regularly with Sean Rad, the founder of Tinder, and some of the best and brightest minds in fintech, credit, and software and B2B solutions. And we've launched the first consumer credit card that gives the end consumer 4 months of zero interest anytime they spend anywhere MasterCard is accepted. So we obviously partnered with MasterCard, and the Eve card can be used anywhere MasterCard is accepted.
And why, maybe explain how that works. Like, why were you able to do that, and why hasn't that been there before at 0% interest for 4 months?
Yeah. There are other solutions who have come close to and maybe place limitations or offer fixed introductory periods of 0%, or perhaps they'll offer 4 months or 6 months of interest, but nothing that comes into the end consumer in the same capacity where there's no limitations whether you spend $1 or $5,000. You get 4 months anytime you spend, whether it's at your grocery store or at your dental office. Why hasn't it existed? I think outside of the United States, people have tried to do so, and PayPal has a 6 months zero interest credit card out in the UK, but it requires a minimum purchase size. And so, to some degree, we think it's a big miss that nobody has done what we're doing yet. But we're really taking kind of some of the best parts of innovation of lots of existing financial instruments that exist today. I mean, in its whole, there are a lot of components where our kind of amalgam is new, but no individual piece that we're doing is entirely new or innovative, to be honest.
Yeah. And who's your target customer, ideally?
Yeah, our primary industry right now that we're targeting is point-of-sale financing for dental offices, vet clinics, elective medical like med spas or LASIK or other types of procedures like that. So our target market right now is point-of-sale financing. I'll always jokingly say that you can buy the crap online that you don't need.
Yeah.
You can buy a new pair of shoes and finance it. You can buy a paddleboard. In January, everybody wants to say that they're going to ride that new Peloton, every single day. But when April rolls around, it's got a thick layer of dust. We're not as athletic as we think we'd like to be, right? But if you can finance the crap that you don't need, why can't you finance it when your kid needs to get a cavity fixed, or your dog is sick, or your brakes go out? And that's a space where we felt like those purchases were just as important, if not more important, than online shopping, and yet they lacked the same level of financing options that e-commerce has been given over the last 5 to 10 years.
And is the credit of the person, does that material for what you guys are doing, do they have to have a certain credit score?
Yeah, so at this moment, we're approving people down to about a 620 credit score. Okay. We hope to be able to lend to lower credit populations in the near future here. But yeah, certain things definitely are taken into account. Income, expenses, credit score, payment history, all of those things are taken into account when we look at whether or not to extend an approval.
So for someone who is going to the dentist, and I remember this very well when I was starting early in my career, had a big dentist bill, couldn't afford it, first job out of school, and that was it, right? There was no alternative options for me besides going to friends and family and trying to get them to spot me. So now with using eFinancial, can spread that out over a longer term.
Correct.
Awesome.
Yeah, so you'll get 4 months of zero interest when you spend with your dental office in that scenario. But many people don't choose to actually pay things off in 4 months. So you get to choose. You can pay it off in 4 months and avoid any interest, or you can take advantage of 4 months and pay it off over 12 or 18 or 24. So we think that the traditional means of buy now, pay later, of fixed payment plans where you have a fixed payment, you have to make it, otherwise it's going to negatively impact your credit, is unnecessary. It's unnecessarily punitive to people who all of a sudden come up a little bit short 1 month. And so we think that the consumer should be able to decide how much you pay every month. You've only got to make your monthly minimum payment with us, and other than that, you can pay it off as fast or as slow as you want.
That's awesome. So until the medical industry makes healthcare more affordable, you're able to just spread things further out and actually make it affordable in the short term.
And right now, over 50% of Americans are struggling to come up with a surprise $400 expense. So, I mean, even if, miracle occurs and the cost of healthcare drops dramatically, we're covering a lot of transactions that aren't covered by insurance. So dental bills, vet bills, brake shops, those kinds of things are surprise expenses that we may not always plan for as Americans and still need to be able to break up over time.
That's super interesting. Well, you've also got a background in the funding world as a CEO of Fundwise Capital. What lessons did you take from that experience, into this new startup that you founded and are now running?
Yeah. Excuse me. It's a good question. Before Fundwise, I was the CEO of a solar company. Then I stepped in as the operating officer of a financial services company, and it was really unique to step away from being the CEO and focus more on operations and lending and how to improve users' experiences. And it gave me an obsession over product. How can you make things constantly just that little bit better for the business or for the customer themselves? And so I would say that my time as the COO of Fundwise gave me a really strong obsession with product and user experience that has led into me now with Eve, where we spend a lot of time and effort and energy refining and improving the user experiences of our end users.
And as CEO, right, you wear a ton of different hats. So you're focused on product, you're focused on fundraising. There's so many different hats you're having to wear. What's been like the biggest surprise to you as the CEO of the company you started?
Yeah. Gosh, that is a great question. The biggest surprise. The biggest surprise is you don't know what you don't know.
Yeah.
And you get so far and you do so many things, or you raise so much money, or you generate so much revenue, and you think, oh man, I'm starting to get it.
Yeah.
And then very quickly after you realize, you get spanked and realize it's not the case. You actually have no clue, right? So the most important thing that I've picked up through all of that is learning to remain ever curious and ever willing to learn.
Yeah.
Because as soon as you start to get comfortable, you start to realize that you actually don't know half as much as you thought you did.
Right. And how do you, stay curious, but also just are constantly learning while still need to operate and execute on things?
A big part of our DNA as a company and the people that we hire and, my personal kind of thesis on life is Isaac Newton said, if I see further than others, it's because I stood on the shoulders of giants. And I think, I'm a small person individually, but I've been fortunate enough to surround myself with some pretty brilliant mentors and people who have pushed me and taught me and helped me realize things that I don't initially think of by myself, or, bring ideas and concepts that may not be immediately so intuitive.
Yeah.
And so my way of staying relevant and staying, teachable is surrounding myself by mentors and always asking questions. Don't get comfortable. Don't assume you know the answer. Nobody's impressed with somebody who jumps to conclusions and gets the wrong answer.
And do you define a really good mentor? Is that natural, or will you actually reach out to people that you really just respect and admire and ask them out for coffee? Like, how do you do it?
Yeah. I would say people are generally willing to help and to mentor, but they're not out there like soliciting their time.
Yeah.
So it's predominantly through outbound, like, hey, I really respect you. I need to pick your brain.
Yeah.
And so it's almost always, let me buy you lunch, let me get you a coffee, let me sit down and pick your brain for a little bit. What, can you spare a little bit of time for me?
And you're, speaking of mentors, like a lot of times those will be in the image of investors, and we're at the Colorado Venture Summit. What do you, as you meet with investors here to potentially, fund your next round, what are you looking for in an investor?
Yeah, not all money is smart money. So I would say what I oftentimes look for is, first of all, fit.
Yeah.
Are you passionate about the same things that I am? And do you understand what we're doing? Because if you're passionate about the same kinds of things and you understand what we're doing, then you'll be able to open doors that I can't open by myself.
Right.
So the first is fit and network.
Yeah.
The second thing that I'm looking for is how involved are you in the positive sense of, do you stay involved? Do you work with the companies? Do you help them solve problems? And then on the kind of more aggressor side, how much control do you expect, and what gets you excited? Because if you're going to push for the fastest immediate dollar, then maybe it's not the right fit.
Yeah.
Right? If we're
it's a
trying
long-term
to
game.
if we're trying to play a game of our DNA as a company is that we think people's lives are improved if they have faster access to fair credit.
Yeah.
And a big part of that is fair credit. A lot of lending right now is very predatory, where it's not what should you pay, it's what do I think you're willing to pay.
Right.
And it's all a game of charging the maximum that somebody is willing to pay.
Where you guys think we can still make really good money and be fair.
Yeah, exactly. So there has to be a balance of emotions and of characters and of interests to understand that if you're willing to support the narrative and the story that we want to sell, then great. But if not all money is good money.
Yeah. And it goes back to you're looking for blind spots, right, that you can't see. And that's part of the investor's job, right?
That's exactly right.
Just to show that to you.
Yeah.
And do you feel like they need to be in your space to see those blind spots?
There's oftentimes a really healthy perspective that comes if they're not in our space.
Yeah.
So it doesn't always have
it's a
to
new
be.
Perspective.
In fact, sometimes I look for people who aren't in our space but understand it well enough to be able to shed light.
And are you doing that the same thing when you're trying to hire people for the team?
Uh-huh.
That you like it sometimes when they haven't been in industry?
Yeah, there are certain positions that you just cannot replace. Like our chief credit officer is brilliant, and you need somebody in that job who really understands capital markets, understands how consumers behave, understands underwriting models, and can leverage experience to position us to where we don't lose money, right? We're not lending out money that we can't collect back in general. In other regards, I find that it's healthier to bring in new, ambitious, and motivated minds that aren't going to be so stuck in a rut and stuck in an old habit, that can bring a new perspective to how we approach things. So I think it really depends on the job, and it depends on the person.
Yeah. And so when you're trying to hire someone, what other things are you looking for?
So there are three things that I always tell every candidate in hiring. I always prioritize. First is integrity. I got to be able to trust that you're going to do the right thing even when you're not being watched. I don't expect perfection. In fact, I think people oftentimes learn best from their mistakes. Yeah. But I expect you to own it, learn from it, and be better because of it. Don't hide your mistakes. Yeah. Don't blame other people. Don't take credit for other people's successes, right? Own your mistakes and own your successes. The second thing is hard work. I place a really big premium on people who work really hard and are willing to learn, because I think that if you find somebody who works really hard and have some general intelligence behind them, that with the right mentorship, you can unlock 2, 3, 4x their potential. And so obviously that leads into the third thing, which is coachability. I expect every person in our company to be willing to learn and to be willing to teach. Everybody has something to learn. Everybody has something to teach.
It seems like you've done a really good job of just relying on your team and like letting go of certain things, which I know is hard as a founder.
It's really
to
hard.
let anything go. Why is that? Like, why have you been able to, it seems like, to do a good job of that?
Look, not every person on my team would say that I'm the epitome of always letting go.
Right.
But I think we've been far more successful because I do generally try to hire people who are competent and let them do things their way. I think it's better to be united on a good idea than to be divided on a great idea. And who's to say that I'm right? Who's to say that I have the great idea?
And you're trying to hire not yes mans or womans.
Yeah.
That's right.
Yeah, absolutely. I try to reward anytime somebody is critical or comes out and says, look, let's think about things differently. How do we reward that both through company recognition or through incentives or through gift cards or whatever it is? Yeah. As I think it's really important that, again, everybody has something to teach. And I think it's really important that every person on our team is willing to at least listen and evaluate.
Yeah. And as you scale, where will your priorities start to shift as a CEO?
That's a good question. Where will right now I spend an inordinate amount of time on funding, whether it be debt funding or equity and raising capital. I think I would really like to, whereas I spend most of my time in that area, and the remainder of my time I try to spend in product. Yeah. I'd like to spend more of my time predominantly in product and less of my time in fundraising, and then obviously continue to be involved in getting to know every person on our team, being there to support and help and lift up the people around me. So from a culture and a product perspective is where I'd really like to spend the majority of my time.
Yeah, super important.
Yeah.
I'm sure you've gotten a lot of advice over the years. Is there anything that's really stood out to you as some of the best advice that you've received running this company?
Just honestly, stay curious.
Yeah.
Stay coachable. It's really it.
Yeah.
You don't know everything, so keep asking questions and keep being willing to listen.
It's really interesting. It seems like I've done quite a few of these now, and that seems like the number one trait of really great entrepreneurs is curiosity, because it drives everything. I believe else. It just drives everything else.
Yeah.
If you're really curious, you just work hard on something, try to figure it out.
Exactly.
And in terms of, again, I'm a bookworm and just curious of what books you've loved that have been really helpful in your journey. Is there one that also stands out to you that you're this is a must read for an entrepreneur? CEO?
There are so many. I read a ton of books, so there are a ton. The Go-Giver is one big one because I really think that you can't give too much. Yeah. Anything you give out, you'll get back.
Right.
So I try to live my life by that principle. How Will You Measure Your Life by Clayton Christensen is another great book, and focus on what matters. So I try to look at that. The Richest Man in Babylon is another really kind of short and simple old book that I think gives some aged wisdom on wealth and how to generate it, and it's not always an overnight game. It's oftentimes a long-term play. So some of those things have really shaped me from how do you approach life? How do you approach relationships? How do you approach what matters most? And I think give a really healthy perspective when a lot of entrepreneurs just go.
Yeah.
Sometimes you need to really take a step back and focus a little bit more on why you're doing what you're doing than what you're doing.
Right. And sometimes, too, that balance is healthy, right? You can come up with great ideas while you're on a mountain bike ride or something, right? When your mind's just at ease.
Yeah.
So that can actually still benefit your business even though you're away from it.
It totally does.
Yeah. One thing I did want to ask you, too, was, as you're growing, what metrics that are really important for you to look at as a founder?
Yeah.
Do you have certain KPIs that you think are really important for founders to consistently look at?
Yeah, that's a good question. I look a lot in every department, there are certain KPIs that we look at. For sales team, what's the activity and what are the results?
Yeah.
Right? Oftentimes, activity precedes results.
Right.
Within our customer success team, we're looking at how quickly are we onboarding customers and what is the time to the first financed customer for them? How are they using us? At a more holistic level, we're looking at what percentage of businesses are using us every single month. How much are they using us? How much are they financing? How long does it take their customers to to go from a received invoice to a completed transaction. And we're looking at all of those because those are good indicators of underlying successes or failures.
Yeah.
And they teach us where we're doing well and where we're not.
Right. It's your scorecard, right?
Yep.
To make sure, and it's your health of the company.
Yeah.
Otherwise, you can look at a simple metric and think you're doing really well.
Yeah.
You're really not.
Exactly.
Yeah. As we wrap up, you guys are going after a pretty large space.
Uh-huh.
So I imagine the vision is pretty big.
Sure.
Where do you see eFinancial going?
I see us over the next 5 years facilitating transactions and giving 1 million consumers access to fair credit.
Yeah, it's a powerful mission.
Thanks.
It's awesome. Isaac, thanks so much. Really great having you on.
Yeah, appreciate it. Thank you so much.
Thank you.